TSC bed, now only $13.99. Save $500. Only at a Sleep Number store or sleepnumber.com.
Oil prices under pressure this morning. Take a look. Crude on track for the largest weekly decline in a month and amid rising U.S. production. Investors are also waiting to see whether OPEC will extend its production cuts. Joining us right now is Stephen Schork, oil analyst, publisher of the Schork Report. Always a pleasure to have you on the program, Stephen. Good morning to you.
Good morning.
Walk us behind what's going on in the oil market here. We know that the supply is one of the issues. Is that what's keeping oil at a limit?
Yeah, there's a problem here if you're long or if you're bullish oil, Maria, because up until about a week ago, the market was behaving the way you would reasonably expect. That is to say that in February and March, we had a big tank in the market. Prices dropped from about the low mid-50s to the high mid-40s. But then a month ago, what happened? We started to reintroduce demand into the market. That is, refiners came out of their maintenance season, and they're buying and boiling a lot more oil than they were 2 months ago. That is to say, over the last 8 weeks, we've added 1.6 million barrels of demand back to the market. The problem here, Maria, if you are bullish now, is if we look at the term structure, oil is in its greatest demand in the summer. We need a lot of gasoline, so June, July, August. When we look at the pricing of oil for June, July, relative to when we go into our maintenance season in the fall, September and October, the prices this summer a month ago were at parity to the fall prices. Today they are trading at a steep discount. So that is a problem when you've got a price for a commodity in its peak demand month trading below the price at its weakest demand point. So that is the clearest telltale for you that the market is well supplied. So now, if you are OPEC, you're in a situation here because it's not only the prices of North American crude oil, that is to say, crude oil traded in the NYMEX, crude oil traded in the Brent, in the North Sea market, but these markets are now trading competitively with Dubai contract. And this is a problem because OPEC is pulling barrels off of the market in their market area, which is reflective in the Dubai price. So the price of crude oil for Dubai, marked against Dubai, is gaining relative to the price of our oil. So that is to say, North Sea oil, U.S. oil, is now competitive with oil being sold in Asia. So now North American oil and North Sea oil is undercutting the OPEC production cuts in Asia. So we're looking at a market that is extremely well supplied here in North America, over in Asia, going into the summer. So this is a potential serious situation if you are long oil at this point.
Stephen, this is Mitch Rochelle. Question around Venezuela and the unrest in Venezuela and what impact, if any, that could have on oil prices and supply in general.
Right now, Venezuela is now in the same category as Nigeria. Hey, it would be great if we could get this oil to the market, but we're really not counting on it at this point. And Venezuela is stuck because Venezuela, let's be honest, they export tar. They export some really, really crummy crude oil, which is really, really cheap. So when you've got OPEC now, and the Dubai contract is based on a heavy sour oil, which is reflective of the Venezuelan oil, that oil is very expensive relative to the light sweet oil that we here in the U.S. and the North Sea are exporting right now. So from this standpoint, again, based on where the spreads are trading, the market is clearly telling us they are not expecting this glut to erode anytime in the near future. So we are looking at a market that's going to be well supplied through the peak summer demand season. So I'm going to say it right here. We're right around $50 on the NYMEX. We were right around this area about a month ago. This is the make it or break it point. If we can't get a rally now when we're introducing demand, and demand will continue to rise between now into June and July, if you can't get support and a rally when demand is at its strongest, what's going to happen to price when we get into July, August, September, and we start to take that demand out of the market? And let's keep in mind, we all want to talk about OPEC. Yes, Venezuela is a concern. Yes, the bombing and situation in Syria is a concern. No one wants to seem to talk about U.S. production. U.S. production is great again. We've added 600,000 barrels of demand to the market that was not there prior to the OPEC announcement. And according to the EIA, we're going to add another 200,000 barrels by the end of the year.
All right.
So we're going to continue to add oil to the market.
We like it. Look. Make production great again. Good. Stephen, thank you for that. We're all in on that. Stephen Schork, great to see you, sir. Thank you so much. Coming up, violent protests breaking out in Venezuela. How